This is chartingwealth.com's daily forecast for the day beginning Monday, the 11th of January 2015. Let's jump into what's going on in the market. IYY continuing to pummel down, down, down. We're actually redrawing on our charts as I speak. A good two-day trend line connecting three two-day candles going down, plummeting down. Again, losses today in the market not as bad as yesterday, 0.77 as we ended the week. Now we are going into Monday and we have had a down market since everything rolled over going down back on the 2nd of December. Were you surprised when the new year started off going down? Well, we were already in a long-term down move. If you can read a chart and look at it, which you should every day, you would have known that, and you would not have necessarily been surprised by the market continuing to do what it had been doing. Now, let's continue to see what's going on. We're going to look intraday for Friday as we get ready for the new week. What happened intraday on Friday? On our 4-hour chart, we saw the market open down and continue down in the afternoon, well below a good, solid two-day trend line. Now, if we go from IYY to SPY, the news remains about the same. What's SPY? Well, of course, IYY is the total market. SPY is the Standard & Poor's 500. This is another exchange-traded fund that tracks the S&P. Big companies, large volume of the market. What do we see? We've connected three two-day candles going down. That index also crossed over going down around the 2nd of December. And slid sideways for a little while and then pummeled on down starting Monday the 4th. So we have big down moves in the market. What do we have going on the half-day 4-hour chart? About the same thing it's been doing for the two prior days. Down is what the market's been going. Sort of leveled out on Monday afternoon and Tuesday and then rolled over strong going down the rest of the week. We're below the two-day trend line on the S&P 500. So hopefully you got in at the right time and are riding this market down if you went into an inverse fund. If you did not, then of course, hopefully you got your money out and you're letting the market correct and you'll buy in cheaper. Smart way to do things. Now, let's look at the Qs. What is the Qs? Well, that, of course, is the NASDAQ 100. It's down 0.82% for the day. Oh, for the record, the S&P 500 down 1.11%. So on the two-day chart, what do we see with the Qs? Big, big down moves. It was down not as much as the rest of the market today, but still almost 1%. Again, three big down candles. If we revert back to our 4-hour chart, it looks very similar to what we saw in the other two indexes, the total market and the S&P 500. The NASDAQ 100, represented by the Qs, is well below its two-day trend line again. More trundling down. Is anything going to bottom out? Well, it's not happened yet. So we are confirmed down moves on all three of our indexes, strongly down on those indexes. We will wait to see when something bottoms out, because what goes down does eventually, when it's the entire index, come back up. We're just going to have to wait and see that. Don't catch a falling knife. Now, lastly, let's look at gold. And what is gold telling us? Well, let's look at the two-day chart first. Three big up candles as the markets crashed. Gold has gone up. Hard to connect those really well, but we do have three big up candles. We're drawing a two-day trend line connecting the last two two-day candles. Gold on our two-day chart crossed over going up back on the 14th. What it really did was slide sideways for a while and then finally has started moving up. If we revert back to the 4-hour chart that we used to rely on like clockwork for gold before it made that sideways slide, meant that our MACD was not a very good indicator for us. However, when we saw gold cross over at the same time that the derivative oscillator did, which is depicted on our charts as a light green box in the background, that oscillator switched over, Right about the same time, the moving average convergence divergence switched over, and guess what? Gold zoomed up. Now, what did gold do throughout the course of the day on Friday? Even though we had big up candles representing two-day movement, gold actually slid sideways on Friday. It was technically down 0.48%. What it really did was open about the middle of where it had moved up over the course of the prior day on Thursday. And then in the afternoon, we got a doji, which means that the movement in gold was up as much as it was down between the close and the open. However, the Hinki Ayashi kind of chart that we use is showing us an interesting symbol. We see a lot more down move that was pushed back up by the bear, pulled down by the bears, pushed up by the bulls, and not nearly as much up movement in gold. Is gold's run up coming to an end, or is it just digesting what's going on? Well, guess what? We don't know yet. Gold is in a confirmed up move, of course, on our 4-hour chart, and has been in a confirmed up move for many weeks now, well, a couple of weeks now, since it crossed over going up on the long chart. So again, we always want to trade in the direction of the long chart, and when the short chart is not moving in that direction but turns back around and starts moving, that is when we find the sweet spot to get in and look for a virtual trade. Now, the admonition I always give you here on our broadcast is we're here to help educate you. We are not here as a stock calling service. We don't charge you anything for what we do, and we are not giving you trading advice ever. Thank you so much for listening. Hey, one last thing I want to ask you. If you are a fan of our programming and of our teaching, we got a question for you. What is it you need beyond what we're doing? Help us out. We do all this for free. We offer this every day, and occasionally we'll ask you for something, and that is feedback. Please give us feedback. Go to chartingwealth.com. Let us hear from you. We would very much like to know what you think, how things are going for you, what training we could give you, whether it's a live webinar, whether it's some kind of course offering, whether it's more tutorials. Tell us what you need to be a better investor, because we want you to learn so that you can make these decisions on your own. Stay with us every day. Learn what's going on. Follow this stuff. It will start to come natural to you. And at least with us, you can see the charts and know what's going on. You don't have to listen to talking heads confuse you. Thanks so much. Hope that you had a great weekend and you have a great week trading from chartingwealth.com.